fantastic evening it is to you viewers. Welcome to Equity News and Equity Access, your cross-section of the stock markets and of developments in the Zimbabwean economy. Thank you for joining us as we broadcast live from our Hampton studios in Harare. I'm Ibn Mabunda. Let's get on to business. On news tonight, ZSE listed exporter Padenga Holdings held an analyst briefing in the capital with the presentation of the 2018 financial results. Padenga is a crocodile skins and meat exporter with operations in Zimbabwe and most recently set its foot on American turf. Revenue scaling 40% to $42.5 million, driven by a tightening skin market and an increased demand for quality. Volumes from alligator operations were up 21% to 13,500 skins against 11,200 sold in the previous year. Resultantly, the operation recorded turnover of US $3.3 million, which is an increase of 85% from $1.8 million recorded in 2017. 44,200 crocodiles were harvested during the period, which was below budget by 6%. Capital expenditure was $53 million, skewed toward solar system as well as their grower pens by 60%. Padenga is in the process of acquiring a local business unit, with the details of that particular transaction still very much veiled and await to be unveiled at their AGM in the month of June. Asked about the 30-day moratorium according to the monetary policy statement pronouncements of the 22nd of February, the finance director Oliver said that through their banker they had applied to have a waiver so as they could take care of their business. Now, here's what's actually playing out in that particular story. Well, they have a situation where they have got costs to cover later on in the year, and so at this moment they feel that if they have to put in their money into the Interbank system, they get their money exchanged at a rate of 1:3 against the dollar, whereas the costs of doing business in the country are pegged at about 1:4 or 1:5. So that mismatch there between what they have to seed into the market vis-a-vis the costs that they have to incur later on in the year, they feel it's necessary for them to actually have that waived. So they are in the process of getting that done. Well, our Equity Access team was on the ground to cover that. Let's have a look.
There's actually a period during the first quarter when we actually don't do any harvesting to allow the animals to recover. But we do have input costs that are denominated in foreign currency. We need the currency. We have a sale in January. Our next sale is probably in May. We have 4 months where we need inputs, but our money has expired. We've addressed that in 2 ways. Our very proactive bankers, Ecobank, have.
Now, to get just into the financials of Padenga in terms of historical perspective, 2014 they recorded revenue of $28 million vis-a-vis profit after tax of $6.5 million, and generally there has been a steady increase in terms of their profit after tax. And also in 2016 they recorded revenue of $31.3 million vis-a-vis PAT of $8.4 million. Moving right up to 2018, where of course they recorded revenue of $42.5 million and profit after tax of $12.7 million. Moving on to other business, ZSE listed hospitality concern Dawn Properties today released 2018 financials. Established in 1977 and listed in 2003, the firm is invested in property sales and leasing, property management, as well as valuation advisory services. Just yesterday, we reported on African Sun. Now, here's the fascinating thing, the fascinating detail actually. Dawn Properties is actually invested in the leasing of hospitality properties, which African Sun uses and operates as hotels. Now, they are involved in the leasing of hospitality properties, particularly Elephant Hills Hotel, Great Zimbabwe, Wange Safari, Monomotapa, Troutback, Caribbean Sun, among other properties. Revenue scaling 117% to $11.2 million compared to US $5.1 million recorded in the same period of 2017. Driving the growth has been the recognition of property development development income coming from development in Marlborough and a strong performance from the property investment portfolio. The property management unit remained the company's main driver of revenue with a contribution of $1.4 million. Just to take a dive into the performance over the past few years, you'd find that in terms of the full year 2014, they recorded profit after tax of $2.15 million against revenue of $5.54 million. There was of course a steady decline to $4.35 million in terms of revenue, and since then there has been a general increase with a sharp jump in 2018 there from 5.13 to 11.16. They're benefiting, of course, from a whole lot of things in the macroeconomic setup, to cite issues to do with the elections, as well as the command agriculture in that particular regard. Income from hotels was 36% higher than the same period last year, reaching US $4 million, mainly attributable to rentals from Elephant Hills Resort and Conference Center, scaling by 46%. Well, that of course would sum up the report with regards to how Dawn Properties has performed. Ecobank Zimbabwe, a unit of Ecobank Transnational Inc., which is of course based in Togo, published 2018 financials. Ecobank is arguably Africa's largest bank by physical presence on the continent, having a presence in 36 countries. Ecobank recording an 81.8% growth in profit after tax for the 2018 financial year to close at $40 million compared to $22 million recorded in 2017. The performance was mainly attributed to a year-on-year increase of 42% in net interest income and a 44.8% year-on-year growth in net fees as well as commissions. The rise in net interest income was due to increased investment in government securities from $185 million in the beginning of the year to $380 million. On the other hand, growth in fees and commissions was driven by establishment of import letters of credit. Total assets growing significantly by 92.1% to reach 1.50 million at the beginning of the year, reflecting billion at the beginning of the year, reflecting both increased deposits and subsequent asset creation. Going forward, Ecobank said it will continue to scan the environment in order to identify new opportunities and be adaptive as it maintains a growth trajectory. Well, just to get into the performance of the bank, particular interest of course would be the profits in that regard. We just have a historical perspective. 2014 they recorded profits of 2.5, 2015 5.2, 2016 9.9, 2017 22, reaching right up to $40 million in that regard. Well, then moving on to what has taken place beyond the borders, JSE listed Pick n Pay stores, which is in partnership with TM Supermarket Zimbabwe, released financials for the full year to March 3, 2019. Pick n Pay stores, of course, partnering with Miko's limited TM stores to come up with TM Pick n Pay stores. Pick n Pay says earnings from the rest of Africa fell 16.2% due to once-off impact of currency devaluation in Zimbabwe and difficult economic conditions in Zambia. Now, having of course exposure in Zimbabwe, here's the setup. While most companies in Zimbabwe have actually reported bound by what we see playing out on the statutory instrument 33, these guys have not actually played to that. They have been guided by IAS 21, which accounts for forex exchange regulations. So IAS 21 dictates therefore that according to what is played out, the last quarter earnings for Zimbabwe as well as net book valuations must be adjusted at a rate of 1:3. Now, this of course juxtaposed to what we've seen playing out across the sector, we have seen all companies recording at a rate of 1:1 according to SI 33. So that is what actually is happened, and this is what has resulted in a decline with regards to the earnings of the corporation across the board. Elsewhere, in his final results to the 53 weeks ended March 3, 2019, the group said net profit rose by about 20% in the final year to March 3. Profit after tax was 1.65 billion rand in the 53-week period, vis-a-vis 1.3 billion in the prior 52 weeks. On a pro forma basis, net profit was up 19.9% as turnover grew by 7.1% and margins improved. Well, that sums up our news bulletin. Up next is news review. Please stay tuned. Welcome back, viewers. It's now time for news review, and with me here is Tinashe, as well as Respect Investment Analyst here at Equity Access. Gentlemen, good evening and welcome to the show.
Good evening, Ibe.
My pleasure. Good evening, viewers.
Fantastic. Let's get the ball rolling. Well, we'll start by having a look at how Padenga has actually performed. Of course, we did attend their analyst briefing, in the, which was actually held today in the capital, with a very strong performance actually recorded there. Let's just take a deep dive just very quickly so that we put things into perspective. Now, in terms of their revenue there, the revenue scaling to $42.5 million, as well as the profit after tax scaling $12.7 million. I'll throw this one to you, Tinashe. What is your interpretation as well as your analysis of how the firm has actually performed?
Thank you, Ben. But if you look at the revenue performance, it has been actually driven, by the tightening of the crocodile skin market. Where the supplies has been weak generally in the global market, which actually pushed up the prices. So Padenga actually faced higher prices, which managed to improve its selling price. But in terms of volumes, Padenga didn't manage to get the volumes as it had budgeted. Its core, the crocodile business, which actually contributes 92% of its revenue. Maybe for the benefit of our viewers, Padenga operates two major businesses, which your crocodile business and the alligator business. The crocodile business was actually affected by your legacy diseases, which is actually a result of your low dam levels, which you experienced in 2016 and 2017, and they actually went on into 2018. So the diseases that had affected your crocodiles, they actually affected the skin quality of the crocodiles, which was generally at 89.1%. Then also the alligator business was also affected by your double scale situation, where you find these uncommon diseases in the alligators. So you find Padenga actually had to take the alligators and maybe harvest them in a later period. So it actually has a higher stock of alligators that it didn't harvest in 2018 period, which actually contributed to the depressed growth in volumes. But the prices actually helped Padenga to improve in terms of the revenue performance.
Okay, now to you, Respect, I would want us to talk about things that are quite strategic in terms of how the corporation has performed vis-a-vis what we can expect in the future, against the background, of course, of other issues that have affected the business. Now, let's talk about the effect or the implication of the cancellation of the EU permit, because by design this corporation actually exports to different countries around the world.
Sure.
The East, they export to Europe. Now
Sure.
EU comes in and they cancel the permit to actually sell into Europe. Can we talk about the relevance of that as well as the response of the corporation to such a move?
Yeah, I think that came through last year, in fact, in the period under review. But most notably, EU was not a big contributor. Two other bigger markets, mainly the Americas and, of course, the Asian market as well. So, I mean, cancellation of the EU source market, it didn't really impact much in terms of loss of revenue for Padenga. So they then get to a point where they managed to resolve some of the outstanding issues, and they're saying now going forward they are likely to see restoration of that respective market going forward. But I think just to add on in terms of the performance to what Tinashe has been saying, in terms of price recovery, this has been driven by the tightening market. And when supply is constrained, prices tend to also firm. But what has been driving that tightening of supply is mainly stricter regulations. There's been a lot of advocacy in terms of advocacy on with respect to species like crocodiles, and so definitely that has also led to lower supplies, and consumers of that same product also trying to cut back in terms of their linkages with the supply chain. So that has also helped Padenga. It has managed to conform to the set principles and targets and whatnot, and that has obviously helped drive their supply as well. So I don't think the European market is much of a loss to them. They have actually managed to counter that. The US market was down, especially 2017, but lately it has been coming back. It's not yet at that stable level, but it is back on track, and they're actually getting into other initiatives to boost their revenue as well.
Okay, as well as back to you again, the ICFA certification, where
Yes.
where a body has been set up, and would you want to shed more light?
Yes, that's what I was touching into to say. There's been a stricter regulation in terms of dealings around such species as crocodiles, and so these guys have set up a board which members have to conform to. So you have to meet certain stricter regulations, which are also monitored by the end companies that consumes their product, which are high-end manufacturers of high-end luxury products. So they are within that group, and they've been able to definitely meet the demands of that body. So it has also helped them drive their volumes and also drive their produce at a much superior price. So I think it's a welcome development for an African entity to be able to be competing in that space where obviously the giants of this world are also playing.
Now, this one, I'll throw this one to you, Tinashe. A question was asked with regards to how they've played out on the interbank market system. And there, of course, the finance director, Oliver, saying, look, we have actually, through Welcome back, viewers. We apologize sincerely for that glitch in terms of our transmission. We should be back on track. Now, gentlemen, I'll throw this one to you, Respect.
Sure.
What is your comment with regards to an issue that was brought up by one of the analysts who asked with regards to how the bank has actually fared on the interbank system given the 30-day moratorium, with the FD Oliver, they're coming in to say they've, through their bank whose FBC applied for that to be waived. Would you want to share a bit of perspective where that is concerned?
Yeah, so the interbank market issue is a quite sensitive issue in Zimbabwe right now because it's against its backdrop that inflation is rising in the market.
Right.
So, but then generally the concerns from Padenga's perspective or any other producer who is actually exporting is that there is a component of their costs in terms of local costs which is exposed to the RTGS dollar. And when you look at the level at which prices have risen over the past six months thereabout, it has had a peg to the USD US dollar value. So what that means is it definitely implies that your costs in terms of local money, they get to be inflated by a certain level, and that level is pegged against the USD. So presently the levels are between 4 and 4.5 thereabout. And whereas now, as a producer, you are also required to sit beyond the 30-day moratorium at the market rate. And so at the prevailing market rate, which producers and other guys who are also exporting, they believe is being subjected to manipulation by the RBZ. Why? Simply because there are no flows. So if you don't have supply and you assume that this is the rate today, and then you make people surrender their own earnings at that rate where you really know that there's no supply, it means you're actually selling them a dummy. Why? Because that rate is not reflective of pure fundamentals of demand and supply. So there is ready demand, there is no supply. But government doesn't want the rate to move up as fast. So guys who are exporting, they feel cheated. They feel that the rate has to basically follow maybe the parallel market rate. Why? Because it closes the gap between their own
that
costs.
mismatch there.
Yes, which they're incurring as 1:5 and what's prevailing on the market. So if the rate goes closer to the market, to their costs in local terms, then they're sorted. And also the cyclical nature of the business that most producers are in. Producers like Padenga, they sell their skins once off. And so if you sell your skins once off, say in September, and in November you are saying if you don't use all your cash, then we are bound to take it. What that means is other costs related to capex and even operating expenses coming along the way, you won't be able to match them because you've been forced to surrender your money at a certain point. So it is against this that Padenga has actually engaged their bankers, who are Ecobank, to try to negotiate with the central bank to say, may you at least waiver this for us or adjust the to us. And I think it's quite critical. Why? Because these are the guys who in the country the much needed forex, and their concerns are genuine. They're a cyclical business. They only sell once or twice a year, but they have to spread their earnings so as they have to spread their flows so as to meet related expenditures along the way. So this is the background. And if you look at what the CZI, which is a business voice, was saying just two days ago at the trade fair, these are the same things that industry is saying. We don't believe that the rate on the market is reflective of pure fundamentals. We want the rate to be flexible enough in order for us to release the monies that we have. And also we need a waiver in terms of the 30-day moratorium. Until then, we are not likely to see flows improving, according to my perspective. So that's Padenga's take as well.
Well, interesting perspective there. Tinashe, what can we expect from the corporation moving forward?
Maybe even before I go to the outlook, maybe to add on what Respect has been saying. Maybe for the benefit of viewers, when you are saying the 30-day moratorium, it simply means that if you have got US dollars in your FCA account, you are just given 30 days to use your US dollars. Otherwise, it will be mandatorily taken by the RBZ and auctioned at the interbank. So if you look at Padenga in terms of its operations, this is an entirely forex business, and its earnings are entirely in forex, and some of its major supplies are also in forex. So it's actually a company which requires much of foreign currency. So for them to ask for a waiver, I think it's a justified call in terms of their business operations. Going on to the outlook, Padenga actually, in 2018, it managed to harvest 43,184 crocodiles, which is actually the anchor of its business. It operates, two major operations, your crocodiles and your alligators. So in the crocodile business, which is the major driver in terms of your top line, your total revenue, which actually contributes to 92%. Padenga is actually has 162,000 grower crocodiles, which is actually a significant stock of crocodiles in its farms.
Fantastic. So given that, what then can we expect? Are they going to be able to maintain such a performance? What can you expect in terms of profit as well as net asset position?
You know what, they are actually targeting to 46,000 or to sell 46,000 skins of crocodiles, which I think they can manage given their stock of 162,000 crocodiles in their farms. Then they also managed, to have 8 new grower pens in their Nyanyani farms, which I think is a significant investment, which will happen, which actually helps them to destock or to decongest their hatchlings unit. In the alligator business, they've got around 44,000 alligators, and they also managed to procure around 13,000 hatchlings and about 10,000 yearlings, which were delivered by October 2018. This is actually a good stock which will speak to your 2019 performance. So in 2019, what affected them was, in the alligator business, it was an issue of your double scale disease, which actually affected their alligator business. But I think as the company which is actually on the ground, they have learned a lot, and I think they have now some measures to contain the double scale issues. Then on the crocodile business, they were affected by legacy issues, your low dam levels. But this season we have seen that in terms of the dam levels where they operate, the Kariba Dam and other feeder streams, they have sufficient water, which means that legacy diseases they are alleviated.
Oh, beautiful. Now moving on to Dawn Properties. Well, yesterday we of course talked about African Sun, and now we're talking about their offshoot, which is Dawn Properties. The revenue there scaling to $11.16 million, which is of course an increase of over 100%. Their profit after tax, well, increasing from 3.05 million to of course $3.52 million. Would you want to give a comment with regards to that performance? I'll start with you, Respect.
So this is really an impressive performance, but I think what's worth notice to really speak into the trend. We are seeing a growing trend in terms of their profitability coming from a low in 2016. This is a time where the company was getting through a restructuring exercise initiated by a new shareholder, which is Brainworks. But also, if you follow the fortunes of this company, they closely mirror the same fortunes of African Sun, which is a hotel managing company sitting on their properties. So now, getting into recent performance, we have seen a better performance coming from African Sun, which occupies the hotel. And these guys use a model where it's a revenue. Dawn Properties get revenue according to what Dawn also get. Dawn gets revenue according to what African Sun gets. So their revenue is dependent on the performance of African Sun. And if you look at what African Sun posted, that was a strong growth driven by tourism and driven by elections. People coming in during the elections time last year. So the same fortunes are now coming in, to filter into Dawn. But more specifically, that's a more than 100% growth in terms of the top line. And that's reflective of also issues to do with sale of property developments in recent years. This is a clearly new business, and it's had a significant impact on that performance, together with that of the tourism, the outperformance in the tourism sector. I believe it's not worth to also point that if you look at the broader property sector in Zimbabwe, it has been tending towards tourism as a way of finding growth. If you look at Old Mutual Properties, if you look at Marsh, if you look at all the other players, they are coming into Dawn's space. Predominantly 90% of their properties, they're in hotel properties, and they have been reaping good, especially in the past year. So that is their exposure to tourism, which is on a growth path, has also contributed to these growth levels.
Okay, over to you, Tinashe. What is your comment as well as your assessment of the performance of Dawn Properties there?
Maybe to make justice in terms of Dawn Properties, we are looking at a company that enjoyed a significant jump in terms of revenue, rising to this 11.16 million, up from 5.13 million. But if you look at your profit line, it didn't respond much, from only 3 million to 3.5 million, when your revenue has jumped from 5.1 to 11.2 million. That's what we should investigate much. I respect maybe to look at on that perspective.
Sure.
The huge jump in terms of revenue maybe was a result of this new income line from your Marlborough properties, as well as your conferencing in your Troutbeck hotels and your Elephant Hills hotels. 2018 was actually a good year for players in the hospitality industry, which was actually driven by much to do with elections, conferencing. But going forward now, what we have to investigate much was why did we have this huge jump in terms of revenue, but profit didn't respond that much.
Sure.
It speaks to your operating expenses, which is something that we have to investigate much. In terms of operating expenses, in 2018, we have seen that Dawn Properties did some, property,
revaluations.
Even property,
Renovations.
especially its Nyanga lodges and its Kingfisher lodges in Kariba. So this going forward, I think, is just a one-time cost in terms of renovations, which doesn't incur much. So I actually expect that this 3.5 million should have even scaled up maybe to these levels going forward. So I actually believe that in terms of going forward, maybe into 2019, since this one was just a one-time cost, we might see its operating profit, its PAT, going up above the 3.5 million, maybe to levels which is commensurate to the jump in total revenue.
So I think that's an interesting dynamic which we really have to look into. But I think what I've just learned dealing with property companies over the years is that there is always a lot of property revaluations which goes on into these financials. So in some cases you find that in a year where a company has got a higher revaluation of its which is not a function of real income anyway. It's just about people who value properties coming to value this property based on your income at a respective year and say this year you are getting much income, therefore your property is now revalued upwards. But there's no pure monetary gain to it. So the impact of a revaluation to the overall performance is that it inflates the profitability. So there might have been a property revaluation as well in possibly the prior year, which has not been factored into this coming year. So when you then factor the difference, you find that it actually lowers the margin, which might have also been an impact. But like Tinashe said, there definitely expenses to do with a lot of construction work going on, a lot of property upgrades as well, and that might have led to that. But definitely at this income level, we definitely demand a better profitability, all things being equal.
Well, we're just going to take a break. When we come back from the break, we'll have an analysis of how Ecobank has performed over the past year. Please take a look at your screen.